Okay, let's unpack this. We're setting the scene on what is, I mean, probably the most illiquid day of the entire financial
New
calendar.
Year's Day 2026.
Exactly. Global markets are basically asleep. Even the 247 crypto markets are just crawling. And then during these quiet hours, something just explodes on Binance. We're talking about a small, pretty obscure token, a huge sudden price surge, and millions of dollars moving in a flash.
And this was not an accident, not at all.
Yeah,
This was a highly organized financial strike.
right.
The sources we have give this incredible, almost forensic breakdown of a calculated market manipulation.
Hack.
A hack, yeah. But the strategy was about how to clean and transfer that stolen capital.
Yeah.
The audacity of it. I mean, timing it for New Year's Day when, maybe risk controls are a little slower, volume is basically zero. It's staggering.
They were absolutely betting on complacency. But our mission today, this deep dive, it isn't just to talk about the crime. It's really to analyze the counter move.
Yeah.
We're looking at the data, the discipline, and the execution that let one single prepared trader see this chaos and will walk away with $1 million in profit.
It's the ultimate story of preparation beating panic. The details here are pretty intense. I mean, we're talking about millions of dollars instantly wiping out short positions.
And it all centered on this one token, Badaroscale or 714.
Yeah. This was a sophisticated actor who found a systemic vulnerability, and we're going to walk you through exactly how they built the trap.
And more importantly, how this one trader, Vita, managed to not just avoid it, but actually flip it for a massive profit.
Oh, and just a quick heads up for everyone listening.
Good point.
This is all for educational purposes. Nothing we discuss here is financial advice. Crypto is incredibly risky, so please always do your own research.
Absolutely. Okay, so let's start with the attacker's timeline because the patience is, honestly, it's a bit chilling.
It is.
So about 8 hours before the big pump, a hacker gets control of a market maker's accounts on Binance. Now, my first instinct would be if you steal that much crypto, you move it instantly.
Right.
You run. But they didn't. They sat on these compromised accounts for 8 hours. Why?
Because moving a huge sum of stolen crypto, especially from a known market maker account, directly to a private wallet.
It sets off every alarm bell.
Every single one. Binance's internal risk controls are built to spot exactly that sudden, massive outflows. The hacker knew that. They understood that to actually launder the value, they had to be, well, more elegant. They had to use the platform's own mechanics.
So they leveraged price action instead of just a direct withdrawal.
Precisely. They had the stolen funds, but they needed to turn that dirty capital into clean profit, sitting in a totally separate, clean account.
And that's where this three-step manipulation strategy comes in. So walk us through that. How does aggressively buying one token actually make you money somewhere else?
It's a classic and, frankly, a brilliant maneuver. The whole goal is to transfer value to those clean accounts. So step one, they take the stolen funds and start aggressively buying the target token, Bureau ACPI, on the spot market.
Okay.
This does two things. First, it creates that initial dramatic price surge you see on the chart. Second, it converts the stolen asset, which was probably something major and easily tracked like Bitcoin or ETH, into a niche, volatile altcoin.
So the spot buying is basically just the fuel for the fire. It's not where they're making the real money.
Exactly. That's step two. While they're doing this, they're simultaneously opening huge long positions on perpetual futures.
Ah.
But, and this is the critical part, those perpetuals are in their separate, clean accounts. So the spot buying forces the price up, which pushes their perp positions into massive profit. And those accounts have no connection to the original hack.
That makes perfect sense. You pump the price with dirty money and you cash out the leveraged gains with clean money. What about the third step, though? The artificial volume.
That's the smokescreen. It's wash trading or self-trading. They're basically just trading back and forth between their own accounts to inflate the volume numbers.
So it looks like there's this huge organic wave of demand.
Yeah, it gives them cover. And more importantly, it tricks real momentum traders into jumping in, which just adds more fuel to the fire and amplifies the pump for them. It's information warfare.
A completely false signal broadcast to the whole market. So let's talk about the target itself. BRR Crypto 714. Why pick some obscure low-cap token on New Year's Day?
It's all about the market structure. It had to be a token with incredibly low liquidity and really shallow order books.
So a small splash makes a huge wave.
That's the perfect analogy. If you pour a bucket of water into an Olympic swimming pool, the water level barely moves. But if you pour that same bucket into a little kid's wading
The
pool,
whole thing overflows.
right, They only needed a relatively small amount of capital to cause a catastrophic price shift because there just weren't enough sellers, not enough limit orders there to absorb the buying pressure.
So the outcome was almost guaranteed. You get this crazy spot buying, the price surges, short sellers betting on stability just get vaporized.
And then the momentum traders pile in, thinking they've caught the first big wave of the new year. That's the chaos the hacker wanted.
Okay, so now we shift from the attacker to the observer. While all of this is happening, this one trader, Veda, he's not caught off guard. He's not doom scrolling on social media or just staring at the green candle.
Well,
His entire advantage was that he had prepared for exactly this kind of scenario.
and that is the fundamental difference between discipline and, just luck in these markets. Vita wasn't running on gut feelings. He had built this fortress of automated systems designed to flag these kinds of structural anomalies.
The kind that really only show up during, what, malicious attacks or extreme market events?
Exactly.
So his system had two main triggers that fired instantly. The first one was just about the move itself, right? It quantified it.
Right, quantified the volatility. The alert was for a plus 30% price move within 1,800 seconds.
Which is 30 minutes.
30 minutes. And that threshold is so important. I mean, a 30% move in a low-cap token over a day or two, fine. But in half an hour on New Year's Day, that just screams external force. It's not natural.
So that immediately puts the token in a special category for him? Potential manipulation?
Correct. But the second alert, that's the real smoking gun. That's what confirms it. It was the divergence between the spot market and the perpetual futures market.
Explain that. Why is that divergence the clearest sign that something is being artificially pushed?
It all goes back to the profit mechanism. Remember, the hackers' real goal was to pump their perp contracts. So when the spot price is being driven up by all this artificial buying, the futures price has to follow. But the mechanism that keeps them linked,
The funding rate.
the funding rate, it goes completely haywire.
Let's quickly define that for anyone listening. What exactly is the funding rate, and how did its behavior give the game away here?
Sure. So the funding rate is a small payment that's exchanged between longs and shorts, usually every 8 hours. It's what keeps the futures price tethered to the spot price. If the futures price is higher, longs pay shorts. If it's lower, shorts pay longs. It's basically the cost to hold a leveraged position.
Okay.
When the hackers started their aggressive spot buying, they created this huge, unnatural demand for long positions in the futures market. And that caused the funding rate to flip violently positive.
So not only is the price up 30%, but now you're seeing people with long positions having to pay an insane premium just to hold on.
Precisely. That is the market structure itself screaming, "Warning, this rally is unstable, it's forced, and it's almost certainly temporary." Vita's system saw that. It identified the reason for the price move.
So he alerts fire. Vita sees what's happening, and instead of panicking or, trying to short into this freight train, he does something really counterintuitive.
And it went long.
He went long. He decided to ride the pump that the hacker created. Why was that the smart move?
Because he understood the source of the energy. He knew the hacker was committed. They had millions of dollars in stolen funds that they had to use to keep buying spot until they either hit their profit target or the exchange shut them down.
So that guaranteed short-term upward momentum?
It was predictable, at least for a short window. His strategy was to use the hacker's own firepower as his engine to ride that first wave of enforced momentum.
Okay, this is where it gets really sophisticated. Because Vita knew the party had to end. Getting in was one thing, but the real skill was knowing exactly when to get out in reverse.
Right. He knew that this kind of manipulation always ends the same way, with a sharp, painful dump.
So how did he know when?
The structural fragility of the whole setup makes that dump inevitable. The second that artificial buying pressure stops, the price is going to crash back down to its true low liquidity level. The trick was knowing the exact moment that pressure would disappear.
And for that, he focused entirely on the spot order book. This seems to be the single most critical piece of data in the whole story. What was he looking for?
He was watching the bids, the buy orders. The hacker had to maintain these massive, visible buy orders below the current price to act as a sort of artificial floor. They were literally propping the price up.
So those big bids on the book were like physical evidence of the hacker's ongoing operation.
Absolutely. And Vita just watched those bids, waiting for one very specific thing. Their sudden, synchronized disappearance.
And when they all vanished at once.
It could only mean one thing. Binance's risk control team had finally identified the compromised accounts and had frozen their ability to trade.
Wow. So he wasn't waiting for a news alert or a tweet from Binance. He was reading the actions of the exchange's multi-billion-dollar risk engine directly in the order flow.
That's the discipline. When an exchange steps in on a major compromised account, the very first thing they do is pull all pending orders to stop the bleeding. That disappearing wall of bids, that was the signal.
The artificial floor was gone. So what did he do in that instant?
Zero hesitation. There's no time to second guess. First, he immediately closed his profitable long positions, locking in all those gains from riding the pump.
And then
Second, he immediately flipped short. He started selling, knowing that with the fake support gone, the price had nowhere to go but down, hard and fast.
and the outcome of that perfect timing.
The sources confirm it. Within minutes, the price collapsed violently. Vida's perfectly timed short position delivered the biggest part of his profit.
Self-told.
The final result was $1 million in profit, realized on the very first day of the 2026 new year. He didn't just profit from the manipulation, he profited from the exchange's intervention.
That is just a stunning example. Let's recap the 3 pillars of his success for you listening. First, it was preparation, building those custom alerts like the plus 30% in 30 minutes.
Second was analysis, seeing the structural flaw, that spot perp divergence, the crazy funding rates, all the proof that the price was artificial.
And finally, and maybe most importantly, execution discipline. Reading the order book, for the exact moment, Binance's risk team stepped in, and then having the conviction to flip short instantly.
Yeah, and this story really matters because it shows that even in crypto, the core mechanics of manipulation, they're often predictable. They leave a footprint.
Right.
By focusing on market structural liquidity, order books, derivatives, you can get an edge, even against these huge malicious actors. Vito wasn't faster. He just understood the entire game being played.
It really makes you think about system design over pure emotional reaction. And that brings us to a final provocative thought to leave you with. If a single independent trader can build a system to pinpoint the exact moment an exchange's risk controls finally intervene, what does that say about the speed of those controls in the first place?
That's the question, isn't it? If the exchange's systems weren't autonomous enough to prevent the pump from happening, if they relied on a human team to eventually pull the plug, are they really protecting users as well as they could be?
Should there be fully automated, maybe AI-driven circuit breakers for these low liquidity assets, especially during quiet hours?
It's a real debate. The very edge that Vita found shows that a window of opportunity exists between when a manipulation starts and when it's stopped.
Yeah.
And wherever there's an opportunity like that, there's also a huge amount of risk for everyone else.